So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and today's guest is Sam Rust. Sam is Chief Operations Officer, a lifelong learner and managing partner at LifeBridge Capital, full-time investor in commercial real estate. Sam graduated from Thomas Edison State University with a Bachelor in Business Management and currently lives in Colorado with his wife and 5 children. He's been active in commercial real estate since 2017 and has led the acquisition of a portfolio of properties across Colorado and Idaho with a value in excess of $300 million. Sam, welcome to the show.
Thanks for having me, Jonathan. It's a pleasure to be here.
Absolutely. Grateful you're here. A lot to get into. Obviously, you guys have really taken off over the last 5 years, but let's kind of jump back to the very beginning. You graduated college, had a degree in business management. Did you jump into the corporate world? How did you discover commercial real estate?
Yeah, so I took a little bit of an atypical path for my educational career. Grew up in Idaho on a 40-acre farm, more of a hobby style. So my summer job was slinging hay bales. I ended up graduating with my bachelor's at 17. Was able to kind of accelerate my path. And so from there, I went straight into construction, actually. I worked for a local construction company on the industrial side for a year and a half. And then from there, moved over to a family business in industrial automation. Started by my grandfather, focused on manufacturing, food and beverage, oil and gas, moved to Salt Lake for an inside sales position, and was with that company for 11 years. So.
Oh, wow. Okay. And then how did you and Whitney get connected, and kind of like, what was your intro into real estate?
Yeah, 2017, had a really phenomenal year, was blessed with some interesting projects on the family business side, and was looking for another challenge, kind of to layer on top. Really enjoy learning. And I had been focused on learning how to be a parent. We had 3 kids, and I felt like that learning journey was underway and that we had space to take on something additional. I wanted to take the capital that I had made and find an investment vehicle that would allow my skill set to impact the outcome. So I did a lot of research on stocks and different investment vehicles, but ultimately landed on real estate. Everybody says, find your niche in real estate. Was listening to a ton of different podcasts, reading a lot of different books, and syndication just kept popping up. Really liked the idea of larger complexes, the economies of scale that come with that. You're really buying a small business. And the big hurdles are, can you find a good deal? And then can you raise the money for said good deal? And I felt like I had the skill set to do the first, and then I had the network to complete the capital raise if I really found the right deal. And so 2018, did my first syndication. That was before I met Whitney. It was a little 64 unit down in Colorado Springs. That project went really well. We closed on it in October. By December, we were renting unrenovated units for above our pro forma post-renovation figures. So when that starts happening, you're like, okay, this market is a good place to invest. This is going to work. Maybe I should look at exploring an alternative career path, and knew that if I was going to jump into syndication and make that a career, I would need a partner. And that partner would have to be a pretty specific, unique individual that had complementary skill sets, similar background, similar value system, and somebody that also was ambitious and ready to grow. And so like, well, I haven't done any masterminds. I haven't gone to any meetups. I haven't done any conferences. Probably need to go where the fish are if I'm going to try to find a partner. So I signed up for Best Ever Conference 2019 and ended up being introduced to Whitney there by a mutual acquaintance. We hit it off almost immediately. I had a second deal almost under contract, so we decided to do a trial partnership on that deal. And it was obvious after about 6 weeks of working together that, hey, this is meant to be. Providence has put us together, and the rest, as they say, is history.
I love that. And by the way, we're talking about Whitney Sewell. If you guys don't know who he is, he's basically the godfather and an unofficial mentor of mine to daily podcasts. So shout out to Whitney. He's incredible, and I can only imagine how great he is to work with. So kind of get into, obviously you had this trial, went very well. So kind of get into, the next steps, kind of the progression and what's led you guys to this large portfolio.
Yeah, I think the first two deals went well. And then going into the back half of 2020, we were really focused on finding that next deal. At the time, Whitney was still working full time in his role as a special agent. So there's a lot of pressures. We were burning the candle at both ends, trying to make this all come together. We ended up closing a deal right as COVID hit. That was kind of an interesting saga. We closed March 17th. So you think back 2 years ago to March, and that was a very unique time. And we took over a property that had 80% occupancy, and of the 80%, only about 60% were paying. So it was a significant value add. But we were able to get that filled up by June of 2020 and really turn that around. We've since flipped out of that property for a pretty substantial gain. But I think a big key to our success was getting comfortable with the risks around COVID pretty early on. By the middle of April, I'm leading acquisition efforts for LifeBridge Capital. So I was very comfortable with the long-term and even the midterm outlook. We were in the middle of lockdowns. We still were a lot of uncertainty in the air, but it was pretty obvious to me that it was not going to be a fundamental change in the market. We're not going to lose so many people that the supply demand imbalance that we see in housing here in America was going to change. Cap rates had frozen in place and the cost of debt had dropped through the floor. And so as a result, where before COVID, we were looking at spreads between our debt and our cap rates of maybe 100 to 125 basis points. Now the deals that I was looking at, there was a spread of 200 to 250 basis points. And so a lot of things were starting to pencil a little bit better. We went on a buying spree in 2020, at least for us. We ended up closing about $100 million in real estate that year. Our first deal in Idaho, which was a significant milestone for us. And then that momentum carried into 2021. We did another $100 million last year. So, I think that probably through 2021 is the second stage of LifeBridge Capital. The first stage is Whitney getting the podcast started. And he and I meeting. Second stage is that those 2 years where we really grew our portfolio, and now we're focused on building out a team. So we're hiring up, we've got a director of asset management on board. We're in the final round of interviews for acquisitions people, investor relations. You're trying to take our team from what today is, 5 or 6 folks here in the States and another 10 or 12 in the Philippines to, probably doubling our headcount here in the States by the summer.
Awesome. Congratulations. That's obviously a really great sign when you're at that level, especially hiring people here in the States, full-time employees. That's obviously a very good sign and a sure sign of scaling, which is great to see. So let's kind of back up real quick. Before you met Whitney, what market were your first deals in?
So first deals were in Colorado Springs. I live in Denver. And so when I was looking around and, hey, where are we going to buy? I wanted to buy somewhere that was within driving distance. There's a lot of people that maybe have the capacity, or at least think they have the capacity to invest out of market, but I was more interested in being on the operator side from the get-go. And so because of that and other time constraints, I was like, it's got to be within about a 2-hour radius. And then Colorado Springs is technically a secondary market. A lot of people will fly past it to go to Denver. But fundamentally, it's very, very strong. Colorado Springs is going to be the largest city in Colorado by 2040. It's got a faster growth pace than Denver. It's got some good stability. A lot of the Air Force Academy, you got a lot of Department of Defense contractors in the area. It's a hub for space development. And it's actually a nonprofit hub. You got the U.S. Olympic Committee there. So there's a lot of factors that drove me towards that market. And it also had, at the time anyways, like a 75 BIP difference in cap rates. So you could get a little bit more cash flow. That has since changed. It's trading on par with Denver. But back in 2018, there was still some delta to be had.
Nice. Okay. So started there, then you and Whitney moved into Idaho. Obviously, like we were kind of talking off camera, definitely a market that a lot of people are moving into, but is not really talked about. Kind of talk about some of the economic indicators that you guys look for, before making acquisitions, and what took you into that region.
Yeah, we're looking really broadly at population growth. Are we buying into a market that's rising and the tide's going to be in our favor, or is it drifting away? And Boise is one of the fastest growing MSAs in the entire country. Home values have pushed there faster than almost anywhere else. It's in the top 5 of almost any metric that you'd want to pick, and that's on the single family side. Traditionally, Idaho had a couple of big employers, Micron, so it's big in the semiconductor space. HP has their headquarters there as well. But over the last 5 to 8 years, it's really diversified, particularly as remote work caught on. The quality of life in Idaho is really high. Cost of living, up until recently anyways, was significantly lower than other nearby markets. It's relatively free. It's easy to start businesses in Idaho. They're very business friendly, especially compared to some of their western neighbors on the coast. You're right up against the mountains. There's tons of recreational opportunities. The school systems are good. And so all those factors have really driven substantial growth. When my family moved to Idaho in 2000, the city we moved into is Meridian, next door to Boise. It was 10,000 people. Today, Meridian is 140,000 people. So just tremendous growth. And as a result, there's not a lot of housing. There's no excess housing. And that's reflected in rental rates. I was just looking at a survey that's done of about 20% of the market there. They actually directly contact 20% of both multifamily and single family rentals. And going back 7 years, the vacancy rate has not been above 5%. And over the last 5 years, it really has averaged about 3.5%. And the most recent quarterly survey showed it at sub 1.5% vacancy. And that's surveying 20% of the units available, or not even available, but just built in existence in that market. So there's just extraordinarily tight demand. We were fortunate to get into a couple of unique deals there. That's been some of our best investments to date, is in that market. We also had an advantage because I'm from there, had some connections, and understand the lay of the land. So we're investing in some local areas that some investors had glossed over. We're not buying in the downtown Boise core. We're a little bit outside, but we can see the growth, and our investment thesis has been proved correct again and again.
Awesome. I love that. That's great. And some really great points you touched on there. So obviously you kind of talked about the supply demand. Are they building? So is there a lot of development, multifamily development starting to happen in that area?
There is, I believe, half of the multifamily units in the Treasure Valley, so an area about 750,000 people right now, have been built in the last 10 years. And they're still running behind on the growth trajectory. So building has slowed down in the last 18 months. Several of the municipalities just said, we don't have the infrastructure to accommodate further development. So they're pausing and getting their water plants upgraded, their sewer treatment facilities upgraded. I do anticipate another mini building boom over the next 2 years. We're actually participating in that. We're getting into some development. But as long as the fundamentals remain strong, Boise's going to continue to grow. It's going to continue to be a great place to invest.
Absolutely. Yeah. And it's crazy. We were, talking off camera about, what it was like even 10 years ago up there, and how much it's changed. And obviously, it's got the college there as well, which is a huge influence. It's kind of one of those places where you're kind of born and raised and you stay there, as well as obviously a huge influx of people. I'm sure a lot of Californians are moving there. So like you said, a lot of great, indications for continued growth. So now that you guys, are established in that area, you've got some relationships. You said now you're really focusing on growing the business. So what's kind of the plans moving forward, as you make these hires and scale and continue forward?
I think we're going to continue to be opportunistic. We're in a highly volatile environment. The market is very different today, even than it was 3 months ago. And we want to adapt. Our core strategy has been around value add, but we're mixing in a little bit of development in Idaho specifically. Development, I'm the first to admit, it scares me. There's a lot more risk in that. But I believe that Boise is one of the top 5 markets in the entire country to develop in right now. And so because of that and because of some connections, we're, again, finding those opportunities and taking advantage of that. I think we're going to broaden our search. Right now we're really focused on the Rockies. I'd love to buy in Utah and Montana. Those are 2 markets that we're looking at. We also want to implement business systems. As we grow, we need to continue to build out processes, continue to improve our culture, continue to drive the culture of entrepreneurship and stewardship that we want at LifeBridge Capital. And so that's where Whitney and I are going to spend a lot of our time, is kind of getting out from working in the business. We want to work on the business. And I know a lot of entrepreneurs say those things. Speaking as an entrepreneur, it's easy to say, hard to do. So we're doing our best to backfill the roles that we currently fill in our organization, and free up some time so that we can actually focus on the strategic vision, the long-term, where we're headed.
Absolutely. And you made a really great point there. Is it's very difficult as entrepreneurs, especially when you were used to wearing so many hats, and you can do those things. It's hard sometimes to take that step back and be like, no, I'm only going to wear this hat and delegate the rest and hire that. And, it's important to empower those employees once you hire them. And that can be hard to kind of not necessarily give up the control, but, allow them to take on that role and run with it.
Yeah, delegation is so crucial. And that doesn't mean just having somebody else do the work. You have to trust them and empower them to make decisions. Now, obviously, there's safeguards that you can put in place, but the better quality people you can hire and the more autonomy you give them within the sandbox, whatever you're aiming at, I think you will create a healthier organization that will it be mistake-free? No, it will not. But you have to accept that mistakes will happen, and that you would have made some mistakes. Maybe you would have made a different mistake as the entrepreneur, as the business owner, but you still are fallible. And so realize that you can go further when you build that team out than if you keep control.
Absolutely. Yeah, you really nailed it there. So let's kind of talk about now, you talked about the economic indicators you guys look for in your current markets. What are you looking at kind of over the long term, maybe, 18, 24 months? Are you looking at other markets, other asset classes, what kind of things along those lines?
Yeah, I would say a little bit of both. As we bring on more capability in our acquisitions team, we do plan to broaden our search of markets. I mentioned earlier, we're going to broaden within the Rockies, but we probably are going to look at some Midwest markets as well. The problem in a lot of high growth markets, which is traditionally where we've invested, is you get groups that are now underwriting crazy rent growth in year 1 and 2. I've been in some best and finals recently where we ended up being out of the money by like 10%. And the group that beat us out, when I was able to chat with them or with the broker and learn a little bit about their underwriting, they're underwriting 15% rent growth in year 1 and 7% in year 2. I'm underwriting 26% over a 5-year hold, as a total, or even less than that. Most of our average rent growth over a 5-year period is going to be under 3% per annum. So it's very difficult to make things pencil when people are willing to push the envelope that far. Now, I believe in Boise, Colorado Springs as fantastic markets. I think that rents are going to grow, 7 to 10% this year and next year, but it's different believing that in kind of a theoretical sense and then underwriting that and presenting that to investors. I just don't think, given the interest rate fluctuations that we've seen, I think there's a lot of uncertainty around exiting cap rates right now. There's just a lot of volatility. And so I'm not willing to really substantially change our underwriting. So that drives us to maybe some other markets that are maybe a little bit slower, a little bit steadier, not quite as much growth looking historically, and maybe not quite as much growth looking to the future, but more of a coupon clipping approach where, hey, we're going to be getting significant cash flow day one, where there's some significant value add opportunities. I think that's going to be an avenue that we explore pretty significantly over the next 3 to 6 months.
Yeah, that makes perfect sense. And really what I've noticed amongst, some of the top operators like yourselves is really that same approach, right? And you really nailed it on the head. And that's why I was laughing earlier, because some of these underwriting models that these operators are taking on, you're like, yeah, sure. I mean, but if it doesn't happen, then what, And so that's where I don't want to say there's a bubble, because we have such a short supply that I really think that the growth is going to be sustained. But some of these, these underwriting, like you said, is so aggressive that there could be a potential where there, kind of comes to a head. And some of these operators, with their different debt they're taking on, doesn't go in their favor. Of course, I hope that doesn't happen, but it is interesting kind of looking out at the landscape, like you mentioned.
Yeah. And I also think, to be fair, like if somebody had underwritten that rent growth 3 years ago and bought everything in sight, they did extraordinarily well and they were correct. Right. So I'm not saying that those groups are necessarily wrong, but they maybe have different sources of capital than we do. Maybe they have longer term time horizons. You can afford to have some juicy rent growth assumptions in year 1 and 2 if you're planning to hold the property for 15, 20 years. Like if I could hold a bet for 15, 20 years, there's a lot more things you could do if your cost of capital is significantly lower, if your equity is not as expensive. But given where we are in our life cycle, we want to be very open-eyed to the risks that we're taking on. And we're pretty reluctant to take on risk that's outside of our control or without at least trying to mitigate it. So buying into real estate, by nature, you're taking risk. But by buying into projects that are cash flowing, that you can implement a proven value add model, or developments with significant entitlement risk taken off the table and in high growth markets, you can account for some of that risk versus what these other groups are doing, and they're just making a different set of bets.
Yeah, that's very true. That's a really, really good point. And, it's kind of the same here in Salt Lake. Development's really the only way, and it's really lack of supply. We never had a ton of multifamily, there's not a lot of, things that are even 10 years old, right? Not a lot of, like, I would say, probably the last 10 years has really been when you've seen an influx, really the last 5. So kind of the same approach. And also when you're getting into a new market, you want to be conservative and not be like, oh, well, last year it did this, but this is our first acquisition here. You're not going to underwrite that same aggressive model because you're brand new, right? You're still trying to get a pulse on the market. So one thing I want to talk about, which is very admirable that you guys do over at LifeBridge, is your charitable contributions. So kind of talk about, how that came about. I know Whitney's a huge proponent of that, and some of the things you guys do in that area.
Yeah, so the genesis of LifeBridge Capital really was with Whitney and his wife. He was working as a state trooper at the time and wanted to adopt. They have a huge passion for adoption. They'd adopted a couple of kids. And adoption is very expensive. It's very time consuming. It's harrowing from an emotional standpoint. And they really wanted to not only be able to adopt more kids themselves, but be able to help other folks in their adoption journey. So when Whitney started LifeBridge Capital, he made the pledge that he's going to give 50% of his profits out of real estate towards helping people with their adoption story. And so to date, I don't know the exact figure, but I think it's well over a dozen families that LifeBridge Foundation has been able to help bring their kids home. And Whitney continues to give 50% of his profits towards that effort. So that's something that really is at the core of who we are. My wife and I support the foundation significantly as well. And we're very passionate about helping people bring their kids home, caring for the orphans in this world, and filling one of the greatest needs that we see today.
Gosh, I love that so much. Like I said, so admirable. And that's great that's kind of, like you said, the genesis of it. And I know that that's also really important in the eyes of your investors, and probably really helps, kind of solidify and, bring, kind of maintain that relationship and keep investors with you guys. So we are unfortunately running up against time. Like I said before, 30 minutes goes really fast, but I do have 5 questions that I ask all of my guests. It's the final 5 questions. So the first question is, what's the best advice you've gotten from a mentor?
Best advice. I think this is a saying from Dave Ramsey, who is maybe a little bit controversial, especially in real estate circles. But I love the concept. He says, children do what feels good. Adults devise a plan and follow it. And that's really what any journey is about. Can you see a goal in the future, fixate your eyes on it, and then come up with a plan to get there and execute that? Are you taking that next step in your underwriting skill to be able to underwrite a big property? Are you learning one thing today that's going to impact the rest of your career? Break it down your journey into bite-sized chunks. That's exactly how I did my first syndication. But if you constantly default to what feels good, you may have a fun life, but it'll fall well short of what it could be.
Wow, that's incredible. I love that so much. It's so true, right? And as you get older, if we all treat ourselves like a business, right? Our lives, it's really about goals are great and they're important, of course, but it's really about the systems and putting those systems in place to achieve those. And then you have that system in place, and then the next one and so on, which is, kind of where you guys are really at in your business cycle, which is awesome to see. Second question, what is it about your career that makes you feel like you're fulfilling your why?
What is it about my career that makes me feel like I'm fulfilling my why? I believe that I've been blessed. I grew up in a stable family. I learned how to learn. I learned how to work. And ultimately, God has blessed me with a lot of things. And I want to be a good steward of what I've been given. And that is really what fuels me. That's what started me on this real estate journey, was this feeling of incompleteness that, hey, I could be doing more. I need to be a better steward of these things. And so I hesitate to look back and say that we've arrived. We've grown significantly. Our business has been tremendously blessed. We've grown. And yet, we have big plans for the future. We want to continue to grow at a pretty fast rate. And in a sustainable fashion. So I think for me, it's about the ongoing pursuit of taking the blessings that I've been giving, turning around and being the best steward of them, for God and for my family and for our employees, to the best of my ability. So iterative rather than arrived.
I love that. That's awesome. What's your favorite non-real estate or investment related book?
I really enjoy reading. This year I'm on a quest to read 75 books, and
wow.
we're on pace so far. So I've got a few to choose from. I think probably one of my favorites is on my bookshelf here. It's called Patton, actually, by the man behind the legend, by Martin Munson. Very interesting historical biopic of George Patton, the World War II general. I love his mentality of, hey, a good plan violently executed today is so much better than a perfect plan executed tomorrow. And just this idea that we're going to take massive action. I think Grant Cardone and others have expanded upon that and maybe modernized it, but I really enjoyed that biography, and it was inspiring to me.
Awesome. Love that. If you could have any superpower, what would it be?
I'd love to be able to see thermal images. And a lot of that is around my love of hunting. I enjoy getting out and chasing elk and deer in the fall. And there's just so many times that I've been looking up at a vast landscape. I'm like, I know there's so many animals up here and I cannot see them. So if I had the ability to see them thermally, yeah, I think that would be a blast.
You get into those thick aspens and you're like, I know they're here. Like, you can either smell them or you can like hear them, and you're like, cool, but
yeah,
I'm out of my element here.
Exactly. They're living their best life right now, and I'm just chasing them all over Timbuktu.
I know I would be curious to go back and see, because I'm more of a duck and goose hunter, but I do dabble in big game, and it would be funny to like kind of rewind and see how many I've actually just walked right by, like either bedded down or just held so still that I didn't even see them. And I just walked
yeah, it would be embarrassing, very humbling for sure, at least for me.
Absolutely. Awesome. And last question, what's the best way for people to get a hold of you and learn more?
Yeah, I'm active on Twitter at Sam Rust. There's a really interesting community of real estate folks on there, a lot of knowledge. So you can hit me up there. You can hit me up on LinkedIn as well. Those are probably the two social media outlets that you can reach me at. Or if you want to learn more about LifeBridge Capital, just lifebridgecapital.com.
Perfect. Sam, thank you so much. This has been amazing. I really appreciate you coming on.
Thank you, Jonathan.
Absolutely. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.